Good morning, good morning, good morning, good afternoon. I hope you all have been well. If you can see me okay, hear me alright, put it into the chat and let me know. Today is the 11th of July and we're here with the daily market analysis. Like for the whole of this week, I have been streaming since I came into the office. Right now, it seems like it's been 5 hours ago. We have been discussing about the Aussie dollar, discussing about the Kiwi yen, um, and that's it. I think. Well, yeah, mainly those couple of setups. So if you have been with me for the whole last 5 hours, thank you, thank you. I actually intend for this live stream to almost be like a companion. Once you turn on your computer, and while you have your for MT4, MT5, or whichever trading platform you have on, have it there. You have your trading view on, you have your Forex Factory on, and hopefully it comes to the point where you have me live streaming right beside, well, on your screen as well, just so that, it's like a trading companion. Hopefully that becomes a habit, and then we can build on that. Okay. Good morning, Jumarinas. How you doing? Hey, Hubert. How you doing? Good to see you. Good morning. Good afternoon, Jimmy. How you doing? Hope you all been well. If you are new to the session, do remember to drop a message and say hi. Let me know where you're joining us from. And for all the regulars, a big welcome back. Thank you again for joining me on this hour for the daily market analysis. If you have any questions at any point in time, please feel free to put it into the chat and let me know. We have a major news tonight. Tonight we have the US CPI to be released. The market has been a bit on a, Monday, Tuesday, Wednesday, today is Thursday. It's been on a bit of a snooze for the last 3 days. Today looked like it was coming back into a little bit of life, but then it's gone back into a bit of a snooze again. So let's hope that at 8:30, if I'm not wrong, we'll look at that shortly. The CPI data is going to breathe some life back into the markets with more liquidity and with more volatility. Okay, you can help me out massively by remembering to click on that like, that thumbs up button, and that subscribe button if you haven't already. And the link for the Discord channel is there in the description. So if you haven't already joined us on Discord, do make sure you jump onto that, because if you can't reach me on the live stream, then you can reach me on Discord. All right. I'm actually thinking this would take a massive effort on my end, but should I do live streams during the US sessions as well? That means I'm almost streaming almost 24 hours now. 8 hours to 6 hours to sleep. So a bit less than 24 hours. But should I start streaming during the US sessions as well? Okay. Hey Augusto, how are you doing? Hey Lily, hope you're well. Now, Hubert with the instant answer going, yes, please. That's a lot. That's a lot to stream. I will have to figure out the schedule. Um, a lot of time spent in front of the screen, so I'll figure that out. All right. What was I gonna do? Quick disclaimer. Any information contained on this webinar should not be construed as advice and is presented as educational material only. The contents of this webinar are not intended to be a recommendation for a financial product. So please remember that your objectives, financial situation, and needs has not been considered, and you should consider its appropriateness to your circumstances. By the way, just wanted to check with you guys. How's the sound? Is it too loud? I'm playing with this thing here. Is it too loud? Is it too soft? Do you hear humming? Do you hear distortions? Let me know, all right? I want to try and make it as good as I can figure out how to. Okay. Thank you, Augusto. Thanks for that. Hey, Paddy Grandpa, how are you doing? Okay. Now with that done, take that away. Oop, go away. Okay. Thank you, Jimmy. Thank you, Jumarinas. Now, what has happened? Now, okay, come, let's go back to what has happened since the last time we spoke. I will tell you that I do have a trade running on the Aussie dollar. I got in a little bit early, just about there, just before I came onto the live stream. 6751 I was in. I might be getting out at break even on that. We were looking, there was a tiny trade. I might just hold on to it. It's a tiny trade, just to see whether it's going to pop up. Got in really early. The next one was trying to get in as it closed stronger above that 6760 level, but I didn't really close that strong. So I'm holding that trade and seeing what's going to happen there. Okay, so if I start looking at the Aussie dollar, you know I'm thinking whether to close my trade or not. Okay, so what has happened since the last time we spoke? We know, firstly, yesterday, the RBNZ held rates at 5.5%, was not hawkish, was not as hawkish as we expected, which led to the Kiwi dollar dropping massively from that 612 or 6130 level down within the hour to 6075, bounced back up, came as low as this point here, which was 6070. We were thinking that could it come down to the support and bounce or react at the support. It didn't get a chance. It found 6070 and then pushed back up again, right? But as it pushed back up this morning, it found at 38.2, also a bit of that neckline from the inverted head and shoulder. We were talking about this during the live stream, that was there an opportunity to get in as it broke above that neckline on the inverted head and shoulder for that kind of move. But it found that level and then it's turned back down. So it's not really on the cards right now. So that was the Kiwi news from yesterday. Following on from that, not that much else, but we had part 2 of Chair Powell testifying at the semi-annual monetary policy report, right? Main thing, so not yesterday, the day before, it was like, all right, employment numbers are cooling. No, not a signal. I'm not going to provide a signal or timeline for a rate cut, but because employment numbers are cooling, hey, maybe a rate cut might be on the table sooner rather than later. And then now he comes back, or yesterday he comes back and says he's not prepared yet to say he's confident about inflation. All right, so yes, distract everyone, talk about employment numbers, but then again, not entirely ready on inflation. Come back to inflation again. No particular inflation number in mind for rate cuts. So it's like we have to be confident that we've got to get to a 2 to 3% or 2% target level. We have to be confident that we, as in the Fed, that it's going to stay around 2%. It's going to be sustainable at 2%. But there's no particular number before they get to a rate cut. It's giving himself a little bit of a breathing space, I feel, but it's undeniable that a rate cut decision is coming might come sooner rather than later. Okay, submits identically prepared remarks to the House panel, so he's just done the same thing. So no big surprises there. And we saw a reflection of that. Oops, move that down. Zoom in a bit. Okay. Hang on. Okay. And we saw a reflection of that from yesterday. From yesterday here. Right? The dollar index pretty much just came down, bounced around. Only late last night, early this morning, started to push down slightly. Now bouncing back up again. Okay, so markets didn't really react to his comments. Just caused a little bit of a blip, and then after that came right back down again. So that was what happened on the news in the news front from yesterday. The slightly bigger surprise that I saw was the pound dollar from yesterday, where it was sitting. We were talking about it when it was right at that point. I didn't expect this. Right? We were looking for it to come up to that resistance. So we were talking about it maybe forming that head and shoulder to break down, or for it to go up, form a double top and reverse back down. But it climbed quite strongly. Right? It climbed very strongly despite the dollar index not doing that much. I mean, it dropped slightly, but not doing that much. But yet we saw the pound dollar push up. So that's actually led me to think, hey, maybe we're going to see that bounce, break through that resistance to the upside. I'll tell you more about that shortly as well. Okay, so that's the news from yesterday. This morning, not morning, early afternoon for me, early morning for you guys. At 2 p.m. GMT +8, we had the UK GDP number, the pound. The UK with their GDP number month to month, it was released at a 0.4%. Was a 0, expected a 0.2, got released at 0.4. Yes, good number month to month. What we saw on the pound dollar at that 2 o'clock period, as it was sitting at that resistance level, it just popped up slightly from 1.2855 up to 1.2868 and then came right back down again, sitting right there. So 0.4 looks like a good number, but it's at a resistance, and we have the US CPI number later, so it just popped up and it's just sitting right there. Okay, so not a big impact there. Then, like I said, since a couple of days ago to now, the main focus is down to the CPI data, the CPI year on year in particular for the US. It was a 3.3, is expected to release at a 3.1. What do you think the number is going to be? What do you think the number is going to be? Put it into the chat and let me know. Put it into the chat and let me know. I'll show you that it has gone from in Feb 3.4 to 3.1, 3.1 bounced up slightly to 3.2. When it went from 3.2 to 3.5, everyone was worried. Everyone was like, oh, inflation is sticky, wouldn't drop, push the whole rate cut decision further out. And then in May, it set at 3.5 to 3.4, relatively flat. June, 3.4 to 3.3. Hyder says 3.2, so lower than previous, but not as low as expected. What about everyone else? Or grab a drink. Let me know, what do you think? Anyone else? Let me see. Okay. All right. You can continue putting your guess, your best guesstimate there. If 3.2 was that weak in the US dollar, that's all I was going to say. I think that it would still, right? I think that if it does come out at 3.2, it might still weaken it a little bit. I think anything lower than a 3.3 is going to help, right? Anything lower than a 3.3 is going to help, but it comes down to how much lower, right? How much lower then it's going to really push the dollar down. You see as well that might pop up a little and then reverse back down. Let's see. Okay, July is pretty much a write-off. We know that it's not very, very unlikely. Never say never, but very unlikely that we're going to see a rate cut. It's just under a 5% chance. You see in September, we are pretty much 70% chance for now a rate cut scenario. All right, and then in November, 85%. In December, 96%. So dot plot, remember the dot plot from the last meeting in June suggests that there might only be one rate cut this year, this half of the year, pushing, so at first they were thinking two, right? So now they've got to one, pushing the other one into next year. So I think next year was supposed to have four, if I'm not wrong, three or four. Then now it's gone to four or five, right? So I think that if this gets released at a 3.2, let's see what happened on a June 12th. Oh, it's right there. That's June 12th. That's when it went from 3.4 down to 3.3. Right? 3.4 down to 3.3. This was the CPI news. That's the US CPI news right there. See that. So we saw a massive drop just going from a 3.4 to a 3.3. Haider's asking what's my best guess. I was actually thinking, now that you say 3.2, I'm not so sure whether my guess is too aggressive. I was actually thinking a 3. Yeah, I was thinking that it might have gone down to 3.1 at that level. Because of oil as well, right? So oil for the previous month, I mean, it's jumped up now, but for the previous month has been pushing slightly, or earlier in the month has been pushing slightly to the downside. Before that, yeah, I was looking at oil, I was looking at a few other things put together, hence thinking that it could get to 3. So I was thinking massive weakness on the dollar index. I was thinking about 3, 3.1. But if you're thinking 3.2, it's around there, right? I think that generally what we're looking for is a disinflation, not a deflation, a disinflation, so a slowdown in inflation growth from the CPI. That's going to again give the Fed Reserve a little bit more of a confidence to cut rates when they do, right? So looking at that, I'm thinking at 3.1 to 3 to 3.0. No cigar even if I get it right? But we'll see. And then with that, again, remember that we saw that drop. So what I'm looking for here is that on the charts, dollar index. So I'm looking at it this morning. I'm long on Aussie too. I'm long on a tiny trade. I want to get in bigger. I want to ride it up. So I'm hoping it's, and I'm hoping that I'm not saying this because I'm not. I'm not biased because of that trade, right? So what I was looking at this morning, I was saying that dollar is going to come up, test that 105 level again, and push back down. I think that's a tiny move that could be playing out right now. Okay, so I'll take that away. Test and bounce back down. It's going to be interesting if it does break below this 104.80 level, because you see that the last time it had that big drop, it came down to about 104.26. What I'm thinking now is that it might push down slightly before the news, but I'm thinking that if where was my arrow? If we do see that 3 or 3.1, we could see it come down to test 104. I'm not ruling that possibility out. Okay, I hope I haven't jinxed it, but that's what I'm looking out for. Today is the 11th of July. We're looking at this is CPI data pending, right? I'm looking at the dollar. It's retracing slightly, still consolidating along that support area. Now, what I want to do is look out for CPI if it's less than 3.2. I think if it's less than 3.2, could see price break 104.80 to trade down to 104 round number support. There we go. All right, so it's consolidating right now. Consolidating at 105. Looking if CPI comes out at less than 3.2%, we could see the price break below 104.80 to trade down to 104 round number support. What you will also notice is that if I apply the Bollinger onto this, you'll see that it shot down within the hour outside of the Bollinger. 2 hours stayed outside and then came right back in again. I anticipate that it might do something like that, especially if it does come down to this level. All right, so it might be this case where it comes right down out of the Bollinger, sits along the support level for an hour or two, and then back up again. Can you please tell me more about the CPI? What would you like to know? I could go on for hours talking about the CPI, so I'm not going to do that. Ask me a question, I'll tell you about it. I'll wait for my course that I'm building up, and you can learn all about it as well. Right, I get into all the details of every news. Okay, yeah, so ask me the question, Hubert. I'm happy to answer, but more specifically, because I could go on for hours just talking about the CPI. So that's what I'm looking out for. While you're typing that, we'll look at the Kiwi. So the Kiwi inverted head and shoulder did not play out. We'll take that away, or has not played out yet. So we'll take that away. I'm highlighting this. You see I'm keeping this here. The MACD, again, if you want to get access to the MACD, you can get a 1 month trial on that. You just have to drop me a message on TradingView. So that's my nickname handle on TradingView. Drop me a message, then I can get you access onto the MACD for a month. What I'm looking at here is on the Kiwi, thinking that the dollar might push back down, but it's consolidating along this point, is that it might turn back down before pushing back up. Maybe not as low, maybe turn back down slightly before pushing back up, because you do also still have a very small trend that way. It might do that. All right, so still looking for that bounce. Actually, I'm just thinking. Sorry, give me a second. you know what? Let's reserve the Kiwi for if we're entirely wrong and the dollar doesn't weaken, but it strengthens. So let's say it comes out at stays at 3.3 or rises to 3.4, 3.5. Whatever it does, let's imagine that the dollar strengthens on after the news. I think that if you look at that, now for it to push down, what I would be looking out for on the Kiwi would be to go short 6040. The might drop, now slowly push down on the news, drop, break, support 20 pips down to 60 to the downside towards that point there. And you might even have further downside as well. Right? But I think that would be another option there on the Kiwi. So what I'll be looking at in this case is we're looking to sell at 0.6080 no 40. Yeah, I'm happy with that. 6040. Stop loss 20, take profit 60. This is in case we see a DXY strength. All right. Just in the off chance it sits there, in the off chance that it sits there and then the news comes out disappointing everyone and pushes massively to the upside. All right. And then with that said, we'll look at the Aussie. It is retracing. So same thing, I was expecting that it's going to come down slightly before pushing back up. We have that. If you haven't got into, I know Hyder's in this trade, I'm in at 6751, about there. If you haven't got into this trade already, then what you want to do is to let it come down, finish its retrace, look for it to retrace, bounce, and get in. I think the safer option, although I've deleted it, but the safer option would still be to look for that 6760 level. Right? Still looking for it to break 6760. Stop loss in this case, I think that 30 pips, 40 pips would be the safest. You just have to put it just below this area. So 30 will be the safest. 30 will be reasonable. I don't think it will go to 110 or 105, but you have it there as just in case you see the dollar go spike right down. You could catch that 105 on the upside on the Aussie dollar. Okay, so we're looking at that and keep that, but I'll do that a little bit wider. There we go. So this is dollar strength, dollar weakness scenario. Then onto into the yen. This was a trade I got into. So this, well, I highlighted this. Why I left this as a trade I got into to show you is that I got in there as I was anticipating that push up. It sat around and then finally pushed up. I was thinking, great, at that time, you know, we're going to head up to that 162 level. It pushed up. It was slightly outside of Bollinger. Then after that, it just sat right there. Right, and then when it came back in, just because I was turning on, trying to find the football, the England and Switzerland match, no, the England match. Saw that crossover, and went, I'm getting out. closed out the trade, right? So I got out at about 25, I think 25 pips or 23 pips as it came back down again. So that was how I used this, right? I got in there as it was crossing up, cross over to the upside, pushed up, look to get out as a crossover to the downside. So it gets you in early, gets you out early, near the top, because if you use the normal MACD, then you might have got out like a little bit later, about that point after it's gapped to the downside, just an hour later. Okay, now you would have got in later as well, so that's almost terrible. Now with that, dollar yen, I was this morning thinking that it's going to test and push back up, but it hasn't. I think that it will be quite interesting if the dollar does see massive downside. You see that on the 12th of June, that was what happened, right? It just went down from 157.30 down to 155.70 before pushing back up again. So we might actually have that kind of move if we see a big drop on the dollar. I'm not expecting it to be sustained to the downside. So what you could be looking out for, I was thinking just below that support level, right there. So I was thinking that you could be looking at 161, below 161.20, so 161.15, stop loss 20 pips, take profit, you can go down to 80, 90 to the downside, 80 pips to the downside. It could go a lot further, but I think that this will also give you, I think 120, while it's possible, I still feel it's a little bit optimistic, but you could have it there, then you could look to close out at 160.40, like that. Okay, so I hope it pushes down now and it sits just along that support level. Don't do anything. Then the news comes out and pushes it right back down if the dollar has that big drop. So 161.15, 20 to 120. Very seldom I'm suggesting a sell on the US yen, but I'm just thinking that if we see the dollar weakness, maybe that could happen very briefly as well. Because remember, if the dollar weakens, the euro is going to be spiking up, the pound is going to be spiking up. With those spiking up, then the euro yen and the pound yen is going to be spiking up as well. Then the yen is going to drop briefly because of the dollar, and then after that push back up. So just be very careful. I think it can happen, but it might happen very briefly. 161.20, 15, 20 to 120. Okay. Stop loss 20, take profit 120. There we go. Okay, I'm happy with that. Yes. Just want to make sure that you guys are still on track. You all gone super quiet. Put a 1 or thumbs up or something. Let me know that it's all good. You're still on track. I was going into the whole multi-currency balance. So I don't know whether I lost anyone there. Okay, then onto the pound dollar. I like what I'm seeing. I was drawing this thinking that it's going to push up, come back down, test, and then push back up again. It pushed up, now it's pushing up. It might not come back down. I would like to see it come back down. It gives a bit more strength for that upward push, and also to delay it, I want this to be a bit more for the news. I think that 1.28, I was thinking at first 1.2890. It feels a little bit far away. Thanks for that, Haider. Thanks, Jimmy. Yeah, so I was looking at that. Then I had the H4 in there because I wanted to find the next level. So the big resistance is up here at 1.3140. Another swing level was here at 1.30. Okay, so back to the H1 time frame. I think that we are going. I would like this trade for the upside on dollar weakness, and this is one reason why I think it's going to come back down with that trend line, right? Come back down a little bit before pushing back up. I would say 1.2890, 40 pips is good, 100 pips to the upside is good towards that 1.3 level. Okay, so I like that one. Pound, dollar, we're looking to buy at 1.2890, stop loss 40, take profit 100 to the upside. Thanks, Dean Lee. Thanks to Marinus. Okay, dollar is showing a little bit of a push back down, so I think this is quite unlikely, but you can't rule that out. We're looking for a sit there and push down later today or tonight. The pound dollar just touched the R1 of the 5-minute pivot table. Okay. 5-minute touch. I think it's doing what we kind of wanted to do. Right? Let it push up. Now hit that R1, retrace slightly or sit along that resistance / support level, and then on the news pop up. I'm fingers crossed, I'm looking for that. Okay, then on to the euro. Yesterday we were talking about this during the live stream that, right after our analysis, that hey, it looked like it was breaking to the downside, but it didn't trigger the trade. It pushed right back up. I think we spoke about this yesterday. I will still keep this view 1.0860, 20 to 55. It actually feels, I was going to say it actually feels like it can go a lot higher, but this is mighty high for now. It feels like it's mighty high for now. I wouldn't be too crazy on the euro unless you see it break that resistance. Then you would say that, you know, you could see further upside, but I think that would be a good move to catch first off, right? So 1.0860, 20 to 55, 1.0860, 20 to 55. We'll keep that one there. Then on to the US Swiss franc. Someone left a comment on the video from yesterday or the day before, I think yesterday, no, the day before, saying that they were looking to sell the Swiss franc on after the pullback. I think that was on Tuesday, so it wasn't a good pullback yet. It wasn't a good selling opportunity yet. I think that you see that holding prices. I've got too many dotted lines here. I I want to keep that. That's there. I don't need that. I don't think it's going to hold that point so near to the support. This broke. We're at that 50 and 60% area that's holding it back. I would be happier to buy the US Swiss franc up, to be frank. Right, just looking at the way it's gone up, came back down to test 50, thinking that it might push up, break that resistance, and push up higher. We don't need that. That doesn't make sense at all. Right, and that might push up higher. I kind of like that in the dollar strength scenario, just because we have everything on the dollar weakness. Right, let's consider the possibilities of maybe even as it pushes, it doesn't last very long, and then it pushes right back up again. Okay, so what I would actually be looking out for here, if we see that dollar strengthen, would be $9020. No, I actually don't see it pushing massively to the upside. I don't see it pushing massively down either. Okay, so let's cover, because we have everything on the dollar. If we look at 9030, stop loss 30, take profit 100, 110. Yeah, let's do that one. I'll tell you why, because on the US CAD, we'll flip it around. So we're looking to buy at 0.9030, stop loss 30, take profit 110. 9030, 30 to 110. I'm happy with that. So I'm thinking that it might even sit there, do that. We'll look out for that possibility. Then onto the US CAD. Right, it's been pushed down, it sat right across, it tried to go lower, bounce a bit. You see that move now showing a bit of a push back down, not showing on the US CAD. I think that it would be a lot more fun if the US CAD does break that support of 1.36. Right, if it breaks 1.36, 1.3580, stop loss 30, take profit 115 to the downside, breaking. So this level, if you look at this level holds right across. The rejection of this brought it all the way back down. If it breaks that support, it might come right back down as well. That's what I'll look out for on dollar weakness scenario. 1.3580, 30 to 115. Take that away. We're looking to sell at 1.3580, stop loss 30, take profit 115. Very big, just bear in mind that there are very big take profit levels here. I'm just putting it there, or not just, but I'm putting it there towards the next resistance or the next support level, because if the dollar does pop, and like for the US CAD in this case, let's see what happened on the 12th of June. You see there, it just popped down. This moved like 50 pips to the downside, right? So we're looking for it to, we're giving it that chance. If it does pop, you might still close out halfway in the middle, not at a take profit, but it gives you the opportunity to try and maximize on the trade. After 3 days of look at that, 3 days of the market sitting right across, right? So we're giving ourselves a bit of a chance to try and catch the moves. Then with that, we'll look at the gold, pushed up, tested, bounce, so sitting right across as well. I don't see a, you see June 12th was right there. It just popped up, and this before was that, I think 50% level, right? Popped up from 23.13 up to the 50% level, 23.37 before coming right back down again. So gold, while it might move, I think that it's going to be a little bit protected, especially now breaking the new high. I would keep the same, 23.90. That's the 50% level. I don't need that. And that. That's the 50% level pushing up. We're looking for that. So it's really shot up and it's tightened along this corner of that triangle. We're looking for it to break above and push higher. I think the highest or the most, what I think could get to will be 24.15. That's quite a stretch as well. Okay, so 23.90 to a max of 24 to about 24.15. So we're gonna look for dollar weakness. Drive gold higher, break 23.90, could test 24.15. There we go. Jimmy said if CPI lower, could see gold break 24 to 24.50. Yeah, 24.50 is up there. Is that previous high that we saw in May? I think maybe 24.20 first. If it might come back down a bit and then push back up again. If it's a very big difference in the CPI. Haider said DXY looks like it's forming left shoulder, maybe a head and shoulder. Possibly. I think what you were, I don't need that one there. That's just messing things up. I think what you were looking at is, oops, is that to the downside. Maybe. I don't like too much chart patterns before news, because it really could be anything on the news. Okay, so there we have it. That's the ideas for today, with the CPI to be released tonight. It all comes down to what's the number going to be. The analysis that we've done here could be entirely perfect and right, or completely wrong. Please, disclaimer applies. Don't feel like you have to rush into, or you have to trade. You don't have to trade. There'll be times where you could look at the news, the number comes out, prices move completely different to what you expect. That's the perfect time to power down and not do anything. All right, don't feel like it's like, oh, the data is right, the price is wrong. I'm going to keep trading it until the price is right. It's never going to happen. Or rather, it's not worth the risk. Trade it based on the number and the price aligning. All right. When I saw Jimmy said happy CPI trading, I thought it looked like a happy Chinese New Year for some reason. Um, yeah, so happy CPI trading, everyone. I am not. I don't think I will be streaming until the CPI news, because that's at 8 o'clock. I might. We'll see. We'll see. Okay. Yeah, so with that said, please remember, trade well, trade safe, stay on the stream, continue chatting, continue looking at suggesting your trade ideas. Please remember to help me out. Click the like and subscribe button if you haven't already. I will see you all on the stream. If not, then on Discord. If not, then tomorrow, same time, same place. You're gonna get sick of hearing my voice, seeing my face, but I'm here to help. Take care now. See you on the stream.